Hey guys, we are waiting on the Fed announcement. So it's a slow day of trading around here. It's not been super active. We had lots of good stuff around the open. We had some good opening gaps. Managed to catch, I think, 4 good trades on the 2SD opens, and that was fantastic. As for the rest of the day, right, our trading plan has gone and booked some profits. That's also very good news, right? The profits are booked before the Fed comes around. And we've been looking at discretionary trades in the Magnificent Seven and the, the Fang and Friends kind of stocks. So what I want to do right now is talk about the importance of Confluence and, how you go through and reassess what's going on with the stock once the trading day is underway. And once things have settled in, how do you make the decision about where to place entry orders, where to place exits? Because it's a little bit different than when you set these things up the night before for trading and price action the next day. Let's take a look at the charts and I'll show you exactly what I'm talking about. So here you see Nvidia, and we've been working with Nvidia, for a long time, and over the years what we've found is Nvidia, whether it's trading at 3 times this price or it's trading at a split adjusted price or it's just trading down, it's always best to wait for Nvidia to trade in the box. So you can see here that in 2 different regions today, Nvidia has gone and channeled sideways, and those sideways channels find lots and lots of room for opportunity if you know what to look for. So let's focus first on our lower box and talk about what it is here that said to us there's an opportunity to take a trade in NVDA. So you can see coming in from yesterday's close, we had a lower open, but it's in line. So when we're talking about an inline open, that's generally saying as long as we're opening around the central pivot, that's going to be representative of a stable open. We're not looking for the stock to do something crazy. Central pivot is yesterday's high plus low plus close divided by 3. It's a floor trader pivot, and it's where we expect the value line to be today. So when you get that open, the first thing you can do is look for the levels from our NASDAQ volatility band trading plan and just say, I'm in if it hits these threshold levels, I'm out if it hits the profit objective. But let's say that you're going to wait a little bit until the market settles in. And, the first thing that you're going to look for is, does the market stabilize around one of the levels that we identified in yesterday's trading? So today, this 113.62 level is right on the money. And we see that that forms resistance to any kind of upward pressure that the stock has, and in fact reverses price back down toward that central pivot. And what we're looking for in particular is that reversal confluent with anything? So when it's coming back down toward the central pivot, what we see is right around the pivot line, we've got this volume weighted average price. And the volume weighted average price overlaps with natural support and resistance at 113.03, which is also the pivot line from the floor trader pivots for today's trading. So one thing that you can do, given that the market is in line, is look at bidirectional trades. And bidirectional trades just means, if the market gets up to a threshold level, then we look to either exit a long position or enter a short position. And in each one of these cases, you can see here, there was a good opportunity for trading in either direction of what was going to be sort of a trendless trading range inside that box. Once price comes down and makes this inflection, for me, one of the most important things is this volume by price data. So the volume by price data tells us there's a lot going on right there. This volume data down here, that tells you something. It's volume by time, and it tells you how much is going on in the market right now and whether it's mostly buy-side volume or sell-side volume. But really the important stuff is out on the right side of the screen. This is a hierarchical cluster analysis of volume over here, and what it tells us is how important is the volume that's going off right there. So when we see a nice big stack at the bottom, that tells us that these inflections are good opportunities for long side entries. Being in the box does not mean you're going to stay in that box, at least not all day. And this behavior right here is very typical of what we see on any trading day for a stock like Nvidia that tends to do a lot of these just sideways moves. We're going to move up into another range, or we could move down into another range, but one way or another, there's going to be a move, and that move is also going to have characteristics that tell us about confluence, that tell us about where we can expect to see things happen. So in the trading room today, we had a couple of calls, war room stuff that we just talk about all day, and we had pinpointed this entry based on last night's volatility band trading plan, but also based on the fact that we knew that if we made this move lower, we were going to be coming into this right here, this anchored volume weighted average price. So the anchored VWAP tells us in this move higher, what was the most significant price level? Where was the volume weighted average price of that thrust that got us up into the top of the range? And then if we come back down to there, is that going to be confluent with other things that we saw happen over the course of today or over the course of yesterday? So I already said this threshold level right here is the area that we were looking for inflections from our trading plan. So based on yesterday's trading, we know that that was something significant. Once the day starts trading, we see that we've got significant volume by price out here, and we're coming into this VWAP, and we've already had an escalation of volume and an escalation of momentum to the upside once we hit that inflection point. So the trade that we called in the room from right here up to 114.10, and then we said, you might want to take it off closer to 114 just because of where this stuff was aggregating, these highs, opens, closes. That's a good place to take it off in the order flow on the way to your price. If you waited, good for you. You got 10 cents higher. It's not going to change your lifestyle, but it's definitely a trade you could have just put on as a bracket and it took you out. But all these things came together, and they came together because once we were trading in these ranges, we weren't just blindly firing off trades. We were looking for a confluence of indications. We were looking for all the telltale signs that something that we expected to happen was likely to happen, and that when it did happen, the inflection was going to be at 2 points that we could predict an entry and an exit for a profit target. So there you have it. That's just a little review of confluence. So when I'm talking about confluence of indications, it's really just that. Is everything coming together in the way that you guys learned at the boot camp, you guys some of the courses that we've offered over the years? Are the things coming together in exactly those ways? And if they do, it tells you that you're in front of the opportunity for profit, even on a day like today where we're waiting for a Fed announcement. All right, I hope you have a great rest of your trading day, and I'll see everybody back later.